Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after 2 consecutive days of weakness, the Australian dollar has tapped on the brakes as the bears close in on the 63.85 level. A slight turnaround is emerging, and from there could see a further gain to the upside as the RSI is respecting the midway point. Along with that, the MACD is holding bullish. Meanwhile, the new month brings a swath of economic data this coming week, with many interest rate decisions, starting with the RBA, US Federal Reserve, and the Bank of England. Along with that, wrapping up the week, we've got the US non-farm payrolls number. It is widely expected that the Bank of England will hike rates 25 basis points. However, eyes are currently turning to a potential 50 basis point rate hike after the hotter than expected domestic inflation data, which came out to around a 32-year high at 7.3. Meanwhile, the US Federal Reserve is expected to hike rates by a jumbo 75 basis point size. That is expected to see a slightly smaller rate hike in December of around 50. And then on Friday, we've got the US job numbers, with the non-farm payrolls holding around 200,000 jobs added last month. So looking at the technicals, as I mentioned, the Australian dollar is picking up a little bit of momentum in front of 63.85, and if so, this pattern continues, then we are looking up towards 64.45 and then up towards 64.90 and reassess. Looking at the euro, the market is a little bit weak but steady as it currently waits for the next round of economic data, being the US Federal Reserve rate decision and then Friday's non-farm payroll reports. Looking at the technical aspect though, we're still holding to a positive stance as we hold them over the midway point, and therefore from 99.30.35 should see a rebound back towards 100.15 to 100.65. Looking at dollar yen, the market is a little bit firmer but still a little bit cautious as it rises up towards 148. Printing a high of 148.27, we backed off slightly. I'm not overly bullish at these levels. I still feel the potential is down and therefore looking towards 143.40 as a broader target. Sterling also a little bit on the firmer side, looking to a further gain, that is towards 116 to 15 to 116.70, with the objective holding at 118. Any pullback should find support around the lows, that is of 115. Finishing up with gold and oil, well, the market rejected that top side 1,666 level on Friday and now shows further potential on the downside as it looks to 1,638. A break there would give further scope towards 1,621 and then reassess. Technically, with the market breaking down, does support a further bearish case. And backing away from that cap, seen at 88.25.55 for oil, the market is a little bit softer into the start of this week. Keep an eye on the technicals, as a break of 86.15 could give further scope to the downside and look towards $81 a barrel and reassess. Well, that wraps it for the start of this week. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoyed a great day.